First, we have Mason, Aaliyah, Krishna, Shadi, Devesh, and Farhan. So Apple. Who doesn't know what Apple is? Apple is one of the most famous brands in the world. What does Apple do? Apple produces Mac computers like the one we see here and the ones throughout the room. What else does it do? It makes the world's best processing system, OS X. What else? It has iPod like this. It also has the iTunes Music Store, as well as the App Store. In 2007, it released the smartphone, the iPhone, which has become one of the best phones in the US today. In 2010, it released the iPad, which has created a new market that was never there before for tablet computers. So a little history of Apple. So Apple was founded in 1976 by Steve Jobs and Steve Wozniak, right here, not too far in Cupertino. It was incorporated on January 3rd, 1977. And on December 12th, 1980, it had its IPO. Apple had one of the biggest openings ever for an IPO. The last company that had created more millionaires was in 1956 with Ford. At its IPO, Apple's stock price was $22. Just to give you guys a heads up, last week it was trading at $400. The stock has split 3 times since its IPO. So, at the center of this company is Steve Jobs. Steve Jobs is currently the chairman and CEO of the company. In 1985, after a dispute with the board of supervisors, board of directors, he resigned from Apple. And Steve Jobs went on to create a company called Next, which is a computer platform development company. In 1996, Apple purchased Next from Steve Jobs, and they brought him back. In 1997, he became the CEO and is still currently in that position. So one thing that has led to great success for Apple and a way for it to interact with its customers and really reach the end user is the Apple online store as well as Apple retail stores. There are over 300 Apple stores worldwide in a large variety of countries. Interesting facts. Apple is the largest technology company in the world and the second largest company behind ExxonMobil in terms of their market cap. So this information has gone down a little bit. As of the close on Friday, Apple had a market cap of $346.4 billion. In comparison, Exxon's market cap was $363.8 billion. And something that's been in the news recently has been the high volume of cash Apple has on hand. They have $76.2 billion, and it's estimated it's actually reached about $80 billion by now. Just to give you guys another comparison, that's more than the US government had on hand at $73.7 billion. And Apple is worth more than Microsoft and Intel combined. So, what can Apple do with all this money? Well, for one, they can purchase every NFL, NBA, NHL, and MLB team and still have $30 billion. What else can they do? Well, they can purchase any of these companies right here. The ones highlighted in blue, and just keep in mind, this is cash that's just sitting in the bank. They're not even doing anything with this money. So its main competitors, HP, they can buy HP for $67.7 billion. And after today's today, that's even less. Netflix, they can buy Netflix for $12.7 billion. eBay, $37.8. Dell, a big competitor, for $28.4. RIM is a manufacturer of BlackBerry. They can buy that for $12.3. Best Buy carries their products, some consider it a huge competitor. They can buy that for $9.5 billion. Sony makes all sorts of products from TVs, computers, handheld devices. They can buy that for $22.2. So, at the core of Apple is the top executive team. As you see here, we have pictured is the core people that Steve Jobs deals with. One thing that people don't understand is that Steve Jobs really has a hand in everything that goes on at Apple. There's something called the top 100 at Apple. And he knows these people that report directly to Steve Jobs, and he knows exactly what's going on at all times in this company. Now I'm going to hand it over to Mason, who's going to do the financial analysis.
As all of you know, the DuPont equation provides a framework for calculating return on equity, which illustrates company's profitability, asset efficiency, and use of debt. Before we get into that, we can take a look at this chart, and it gives us an idea of Apple's performance over the past 5 years. As you can see, net income, sales, total assets, and common equity have all increased substantially each year for the past 5 years. Okay, so with these, with the chart on the left, it illustrates the three components of the DuPont equation: profit margin, total assets turnover, and equity multiplier. The profit margin in this graph, on this chart, corresponds to the percentages on the left y-axis, while the other two, total asset turnover and equity multiplier, correspond to the ratios on the right y-axis. And as you can see, both assets turnover and equity multiplier have decreased over the past 5 years, but only slightly. More specifically, equity multiplier decreased from about 1.7 to about 1.6 over the 5-year period, while the asset turnover stayed about at 1, increased about 0.1 ratio point. And at the same time, the profit margin or profitability of the company has gone up from about 10% to over 20%. So it's over doubled in 5 years. And then if we take a look at the graph on the right, which illustrates return on equity, we can see that the return on equity has gone up from about 20% in 2006 to almost 30% in 2010. And when we compare the two charts, it's pretty clear that the reason why it's gone up is solely attributable to profit margin, because the other two factors actually went down. The other way to compare the return on equity of the company, besides doing it over time, is to look at it compared to other companies, competitors. And in this chart, we have 3M, Dell, and HP. All four companies' return on equities are somewhat comparable. They're all within a 14 percentage point range. But this graph alone, this chart alone doesn't tell us that much. But if we decompose it and look at the different components of the DuPont equation, we can see that the reason why Apple's return on equity is so high is because of their high profit margin. Both their asset turnover and equity multipliers are pretty low. The same is true for 3M, which is the most closely comparable to Apple, because as you can see, the ratios there are about the same, but just smaller. With Dell and HP, in contrast, the reason why their return on equities are so high is because they have such high equity multipliers. So those two companies are using a lot more debt than Apple. Apple is using a lot of its asset financing through common equity, whereas Dell and HP are using much more debt to finance their assets.
Hello, I am going to be talking about the balance sheet. Basically, this chart explains the revenue for Apple. We can see the top chart that is the last 5 years. And I'm sorry, I don't know if you guys can see this, but this is the from the 2011 quarter 1 and 2. It's an assumption because the year hasn't ended, obviously. But if you guys can see, it's up to here. So you can basically see that for the last 5 years, each year the revenue has gone up, and the 100.32 billion, it was calculated, or it was the amount that was ended end of June. In the bottom chart, we have basically compared with Apple's competitors, and again you can see, and this is for 2011, and you can see Apple has the highest revenue. This one basically again shows the cash that Apple has, all the cash Apple has. Again, the last one is 2011 up till here, I believe, and you can see that each year has gone up except 2009, and that was kind of because of the economy, it went down, but in 2010 it boosted up, and 2011 it has even more. And then again, the competitors, I'm sorry, you cannot see, Microsoft is about here, Nokia, I believe is right here, but Apple is here. So again, we can see that with the competitors that Apple has a lot of cash. This one is kind of an amusing chart because you can see that Apple has no debt, it's zero. And if you compare it with the competitors, Microsoft, I think, is still here, Dell is here, and basically Apple has zero, which is a great thing. Not a lot of companies have zero debt. This one basically shows the charts that all the money that Apple puts into all the research and development they do for their products, and each year again, the top chart is within the last 5 years, and you can see each year they have put more money into research to get a better idea of their who their consumers are and what kind of products they can offer. And in the bottom chart, it shows I think Microsoft and Nokia kind of have a higher money that they put in their research development, but Apple, it has obviously it's putting more money into their research, and it's pretty high up again. And in general, we know that as far as their inventory, they do a lot of they have a lot of products, but they keep their inventory low because they have a lot of demand, and which kind of makes it more successful for their company. And Krishna is going to talk about it.
Hi everyone. I'm just going to discuss some major trends in 2010-2011. So the trends triggered the Apple stock to rise steadily over time. And in the past 2 years, Apple products have gained like a huge market share in America. Smartphone penetration is set to double by 2011, and Macs have been gaining market share as well, but it's less than 10% when compared to the global computer market. The main products of Apple, such as iPhone and iPad, are actually set to increase in sales by 35% by the end of 2011. And as you can see in the graph, there's an increase in stock price whenever something, a new product is announced. Like when iPhone 4 is announced, suddenly, the stocks start surging up, and then there's always like there's a pattern of the peaks and the troughs. But then, whenever, like say when Steve Jobs said he announced the medical leave, the stock suddenly dropped a little bit, and then it like picked up when iPad 2 was announced. I mean, that's just kind of showing you how much of an impact Steve Jobs has on this company and on investors. Next, I'm going to talk about net profit margin. When doing simple probability ratio analysis, net profit margin is often the margin ratio used, and net profit margin shows you how much each sales dollar shows up as net income after all the expenses are paid. In this case, since the net profit margin is around 39.5%, that means that about 39 cents of every dollar is profit for Apple. And that net profit has been climbing up steadily over the years from 2006 to 2011. Highest gains were from 2008 to 2009, and net profit increased dramatically, at least 10% after the announcement of iPhone. And then it increased again from 2009 to 2010, about 5% when iPhone 4 was announced, and then the iPad came into market. So net profit has been steadily increasing over time, and it just measures profitability after considering all expenses, and it can be calculated using net income over net sales. And then looking at gross profit margin, gross profit margin is around 41.9% for 2009, which is a larger increase from 2008's gross profit of 35.8%. And this means that for every dollar of revenue, Apple kept 41 cents to pay for other expenses, interest expenses, and distribution to shareholders. The gross profit margin varies from net profit margin in that it eliminates all fixed costs carried by the company, and gross profit margin looks more at the relationship of variable costs to sales. And Apple's gross profit margin is really high. Like the industry gross profit margin is like 9.5%, and Apple is currently way above that.